Let's come to Nigeria now and continue the conversation we started on Business Incorporated on Friday. Remember that consumer credit scheme that has been approved by the president. On Friday, we did talk about the issue of credit rating, which of course is going to be the foundation to access this. Today, let's talk about how you can access it and what you should prepare for, what you can benefit from it. So we're discussing the consumer credit scheme and tips to access the benefits that are inherent in that scheme with the managing director of Optimus by AfriInvest, Mr. Ayodeji Ebo. Mr. Ebo, good afternoon and thank you for your time.
Good afternoon. It's great to be here.
Great. So we see this credit call set up by the president. Obviously, it's going on in other countries, especially the Western world. A country like the United States, you want to buy a phone, you don't need to get all the cash for it. You can, buy it and then pay for it. But when we look at the specifics of Nigerian environment, would you say we are ripe for this? Because we still have issues of bad debt and all of that. And somebody did say that it seems a lot of Nigerians do not have the culture of paying back loans.
Okay, thank you very much. This is a very interesting question. First of all, I must say that the initiative is laudable. Yes, there will speak on things that should be improved on. It's just a starting point. We've not had this in the country before. But like you rightly said, in other climes, part of the major backbone for the success of this, even both from the government angle and the private sector, is about building the right credit, especially credit scoring. So you go to develop clients, even for those that don't need loan, but in a bid to build a very good credit scoring, and so that to give them access to borrow at a very cheap rate, they collect loans and pay back to build that trend. And some other countries, even your utility that you pay for on a monthly basis fits into your scoring. So you have a target. Part of what needs to be done, that the government needs to do beyond the setting aside of 100 billion to fund this based on the 2024 budget, is a robust credit structure of credit scoring. Like you have the unique biometric verification number in the banking system. There should be unique credit scoring system that if I access a bank A today, the first thing they will check my credit scoring. Yes, you have the credit bureau system that checks whether you have been paying back, whether it's performing or not. But there should be a standardized system to assess everyone. So, and once this is done, then you begin to educate Nigerians on the implication of this. So when someone at his current level borrows 10,000 and does not pay back, but knows that this 10,000 that I'm not paying back, by the time I get to a level, I'm able to borrow 1 million and I want to do that because of what I've done 5 years ago, 10 years ago, may stop or not, may make me borrow at a very high cost. So once we begin to do that and imbibe that culture, Nigerians will want to pay back because you won't want to, because of the circumstances today, want to soil the very potential that you have tomorrow. So there's a lot that has to be done by the government around the structure, around the policy, so that we standardize the 100 billion naira is just a small fry. There's a limit to what government can do. But once there's standardized arrangement as credit structure or scoring, the private sector too would be looking forward to extending credit. And once we do that, I think that it will minimize the default rates that we currently see in the economy.
So the presidency has said that eligible Nigerians should apply for the consumer loans before May the 15th. What should I be doing as a Nigerian to be eligible, and how should I approach this?
Okay, the first thing I think we need to note is that they are facing it. It's going to be in phases. So the phase 1 is for civil servants. And you would see that means salary earners. These people already have access to loans before. But I think starting from the low risk, so you've seen the triangle that was used, starting from those that are a bit low risk, that they know they have been borrowing and paying back. Secondly, they'll come to the white collar groups. That's those that have the day-to-day job and they earn monthly, which are also monthly earners. The last space, which we know it's the high risk, is the informal sector, where we still feel there's still the gap. So that is where a lot of the structure needs to be put in place. So I learned this morning the portal has been opened. If you want to access it, if you are eligible to access, you go to the website that has been open, I think www.creditcorp.ng for you to register. You will see you just follow the instruction. It's very straightforward. But it's basically, I think the first space is basically for those that are salary earners. First of all, for them to start with. But we feel that amount, 100 billion, is really very small. So focus to re-emphasize that should be on building that structure where they can partner more with investors or private sector.
When you say partnering with the private sector, in what form do you see that coming? The private sector will start giving credit also?
Yes, that's what I mean. So if I know that there's already a structure for scoring, I'll start with those that have the high score based on the methodology that has been used. You will see that for some banks, they give mostly to salary earners on a monthly basis that you pay back. You need to have your salary with them. For the business people, they check their cash flow for those that have been banking with them for a certain period. But there's no standardized way. So if you go to bank A, the requirement is different. You go to bank B, but it's almost uniform in developed climes. So if the government come up with this policy that, for me, and you are speaking now, I should know what my credit scoring is, and there should be an incentive for people that are paying back. That is the essence of the scoring. So if you are on, let's say you're on 80%, if the interest rate to borrow is 20%, if you're on 60%, maybe you are going to borrow at 22%. So everyone would target to focus to borrow at the possible lowest interest rates by building a very good credit score. So if that is done, the private sector will see that this sector has been the risk, and they will be willing to channel a lot of funding to that space.
But at this point, has the presidency elaborated on how they are going to check the interest rate? Because I mean, if they're going to go with the existing MPR now, that is another discouraging factor.
Yeah, so that's one thing that is still missing. The interest rate that will be used is missing. The single obligor limits, which means what, as an individual, what am I, the maximum amount I'm entitled to borrow, or what would be the yardstick to know what I can have access to. My salary, 500,000 monthly. Is it 1/3 of that based on the rule that I'm able to access? So these are some of the things that were not included in the circular, but it's just a starting point, and I believe that as things unfolds, we think we need a lot of more information that will provide clarity within this space.
Yeah, we certainly do, especially looking at the time that the presidency has kept, May 15th. I mean, eligible individuals are supposed to have by then made their request. But thank you so much for this clarity. Managing Director of Optimus by AfroInvest, Mr. Ayodeji Ebo.
Thanks for having me. Have a good day.
You too.